G'day and welcome from Melbourne, Australia. I'm Michael Ralph, a CPA and a senior TM1 developer with Cortel Australia. I'm going to demonstrate an intercompany elimination module that I've developed in TM1 because the consolidation engine in IBM's Cognos TM1 is actually just an aggregation engine. It adds up numbers extremely quickly, but it doesn't eliminate intercompany trading. To an accountant, a consolidation involves the eliminations of transactions and balances between subsidiaries within the organisational hierarchy. If subsidiary A owes money to subsidiary B, the debtor and creditor do exist in the financial accounts of those subsidiaries, but they do not exist in the consolidated accounts because you cannot trade with yourself. So when you're consolidating the accounts, one of the task that is undertaken is to eliminate the intercompany transactions and balances, or as a Dalek would say, exterminate them. So the module I've developed provides a set of TI processes that create metadata, the sub-accounts for each intercompany account, one for each entity within the structure. It creates the elimination entities in the structure under each parent, so that as subsidiaries meet a common parent, the elimination can happen at that point, not just at the top. And it creates a mapping cube with a slice for each organisation hierarchy within the entity structure, showing the elimination entity at which each subsidiary will meet another in the structure. A second set of TI processes performs the actual intercompany eliminations, so it goes through the data for the nominated time periods and eliminates the intercompany transactions and balances by looking at the elimination map that has been created in the first set of TI processes and writing the elimination journals to the elimination entity and taking any mismatch to an external account. So if it was intercompany trade debtors, intercompany trade creditors, subsidiary A's debtor B, and subsidiary B's creditor A, if those amounts don't agree, then the difference is taken to a nominated external account, such as external trade creditors, and that ensures that the intercompany amounts are fully eliminated on consolidation, but also that the balance sheet still balance, including in the intercompany elimination entities and the consolidated total. The module I've developed can handle multiple currencies. It can handle continuous time dimensions or distinct year and month dimensions, and with code modification would easily handle any sort of time dimension. And it's designed to be implemented, just dropped into an existing model, and you just configure it to identify the entity structure and the intercompany accounts. And it's also designed to be implemented with Core Metis, which is a new Cortel offering for a greenfield site that gets some development up and running very quickly. So let's begin. In this model I'm going to use to demonstrate the intercompany elimination module, I have 4 data cubes. I have the ICX balance sheet and the ICX profit and loss, and both of these have a continuous time dimension, which is months adding to quarters to half years to years. And then I have the ICZ balance sheet and the ICZ profit and loss, which have discrete year and month dimensions. All of the cubes have the subsidiary dimension, and that has 2 organisation structures. And in organisation 1 we have the leaf elements A to M adding up in a certain structure, and then in organisation 2 we have the same leaf elements A to M adding up in a different structure. In the account balance sheet dimension, you can see our equity accounts, liability and asset accounts, and you can see here I've got intercompany debtors and creditors which don't have children at the moment. because the metadata creating process will create the sub-accounts, one for each of the leaf A to leaf M. The ICZ balance sheet account also has the subsidiary dimension and the account balance sheet dimension, and then the profit and loss cubes have the subsidiary dimension and an account PL dimension, subsidiary and PL, and the account PL dimension again is a simple profit and loss, in which we have intercompany sales, again with no children yet, and intercompany interest income, intercompany interest expense, again with no children. Now, to configure the model, the first thing I'm going to need to do is locate the dimension ICE cubes and edit that and put in the names of the cubes that I'm performing intercompany eliminations on. So I've done that already. I then need to locate the ICE financial entity dimensions within intercompanies dimension and edit that and put in the structures or the entity dimension, so the ICX subsidiary as an element. Then this is a multi-currency model. We use a very flexible, slightly complex currency model that I won't go into for this demonstration. But in that currency process, what I'm going to need to know is what currency to have my elimination intercompany entities. And if I get the ICE dim update fin entity dim space 1 create IC elimination entities process and edit that, and in the prologue tab there'll be a line that talks about currency. SIS currency equals AUD, but I may have that linked to a system cube that has the currency of the model, the local currency of the model identified, and then I just do a cell get S to get that currency that is needed in the multi-currency model, so that I know what currency the intercompany entities are. Continuing to configure the model, I look at the ICE hierarchy list cube and get the entity dimension view and just identify within the ICX subsidiary dimension the top parents in the various hierarchies. There's a pick list there, but it's just organization 1 and 2 that I require. Then I need to look at the account dimension view, and for ICX subsidiary, then the account dimension leading into company entities, well, in one queue it'll be ICX account balance sheet, and in another queue it'll be ICX account P&L, and in the balance sheet dimension, the top parent is balance sheet, again there's a pick list there, and the P&L account dimension, the top parent is net profit after tax. So I just need to identify those top parents. And then I look for the ICE cube parameters cube, and in that cube, for each dimension, for each cube, ICX balance sheet, ICX profit and loss, ICZ balance sheet, ICZ profit and loss, I identify the version dimension, and then I identify whether it's a continuous time dimension or not. That then drives blanking out these cells. So it's continuous, the dimension here is ICX period. If it's non-continuous, distinct year and month dimensions, I identify those here. I identify the subsidiary or entity dimension in each of the cubes that I'm working with, and the account dimension in each of the cubes. And then it's optional as to whether you're doing multi-currency, but if you are, you specify that dimension. And then as you're taking data from the entities, to the elimination entities um, on the currency dimension, which element you're pulling data from. In this case, translation is a sum of all the different currency elements translated to Australian dollars, so that's the source. And then currency 2 is input AUD on the elimination entities. And the same for my data source dimension, which we use in our core metis cubes. So it's optional, but I'm identifying that, and I'm taking total value from the leaf entities, and when I transfer the data into the elimination entities, it's into the TI process element, and then identify the measure dimension and the measure. I'll just show you that data source dimension so you know what I'm talking about there. It's a dimension that I use, and we use in core metis, to identify where data came from. So was it manually entered? Did it come in through a TI process? Or was it rule generated? And this dimension, one of its advantages is we have a rule calculated value, and we can do a manual adjustment and then report on total value. So from leaf element it comes out of total value and into the elimination entity at TI process. It's something like a simple audit trail. And next I configure the attributes on the account dimensions. So if we get to the balance sheet account dimension and edit element attributes, then I need to identify the intercompany accounts by just putting in yes there, and I need to identify the other account that will hold the mismatches upon elimination. So this is where company A says that company B is a debtor, company B says that company A is a creditor, but the amounts that they recognise, one may recognise 100, the other one 95, the mismatch is 5. We need to put that somewhere so that when we eliminate the debtor and the creditor, we've got this mismatch of 5. That has to be put into the elimination entity somewhere else, so the balance sheet balances for the elimination entity so that the consolidated accounts balance. So in this case, where there's a mismatch between intercompany debtors and creditors, I'm going to put that mismatch to external creditors. This could be a timing adjustment, that one's issued an invoice and the other one hasn't received it. This could be a currency difference. There may be a small amount because of currency translations. And I need to put in a value for the elimination sign, which is when I'm writing that amount in, do I need to reverse the sign? And in this case, yes, debtors gets reversed. Similarly, for the profit and loss, on the account PL dimension, I'm identifying intercompany interest, income and expense as intercompanies, and they're a pair, and any difference goes to external interest expense with a sign reversal on one of them. Intercompany sales, in this case I don't have an intercompany cost of sales. I'm assuming I don't have profit transfers or one entity selling to another making a profit, because that would be a manual adjustment. It's not automatically identifiable. But in this case, yes, I have intercompany sales, and when I reverse it, I eliminate the sales and take it to cost of sales, which is an external account, and I'm reversing the sign. So that's the configuration, or the explanation of the cube as it exists, and the configuration that we need to do prior to creating the intercompany metadata, and the next step will be to create that intercompany metadata. So to create the intercompany metadata, we're just going to run a process, or a chore, master create intercompany metadata, which runs a TI process of the same name. That TI process runs a series of other processes. It goes through the account dimensions, so the account balance sheet, account PL, identifying the intercompany accounts, and then creating sub-accounts, one for each of the leaf elements A to M, under each of those major intercompany accounts. And it goes through the entity dimension and creates an elimination entity below each parent, elim dot and then the parent's name, and then it, through a series of nested loops, goes through and identifies the parents at which each pair of intercompany entities will meet in each of the structures. So let's run that process. So that's the metadata created. That process needs to be rerun, or that chore needs to be rerun anytime there's a change in the structure. So if we restructure one of the hierarchies or we add a new leaf element to the hierarchy, we need to rerun that process. What has it done? Well, we can see that it's created a new cube there, which is the intercompany elimination entity map for that dimension. We'll examine that in a moment. But first of all, let's just go back in and look at our subsidiary dimension. And I'll just turn off those aliases at the moment. And we can see that it's now added these elimination entities, one below each parent. So that if leaf K and leaf L have intercompany trading with each other, the reversing entries will be in elim parent 2. And in the account dimension, intercompany debtors now has 13 sub-accounts, one for each of the entities, and intercompany creditors has the same. And if we look at the profit and loss or the account dimension, and again we can see intercompany interest income has got the 13 sub-accounts, intercompany interest expense has got the 13 sub-accounts, and intercompany sales has got the 13 sub-accounts. At this point, it's a good idea to edit your rules file and to just add a rule, lines 45 to 49 here, excuse me, which says that if the subsidiary element equals, and then looking at the account dimension, looking at the attribute counterparty, we'll see that in a second, then 0, else continue. What that is going to be is that if I'm in entity B, then any intercompany subaccount dot leaf B will be 0. That'll prevent me trying to enter an intercompany account with myself. So it's just preventing erroneous data entry. We do that for each of our cubes. So if I just quickly look at Organization 1 view of the balance sheet and go down to the leaf elements so we can see this, then you can see that India Proprietary Limited can't enter data against intercompany debtors leaf I and intercompany creditors leaf I, etc. And then Juliet can't enter against leaf J, etc. Now you can see I've got my aliases switched on in the entity dimension, but I've got the elements here. So just to tidy things up and be a bit more professional, I'll run another chore, and that is just to replicate those aliases. So we'll go back into the balance sheet cube, the organization, and you can see that I've now got intercompany debtors Alpha Proprietary Limited rather than leaf A. So I've just copied those aliases from the entity dimension into those sub-accounts. You can also see that my data doesn't balance at the moment. My balance sheet doesn't balance. Wherever I look, there seems to be things missing, and that's because I don't yet have my intercompany data because I didn't have the accounts to put it into. So it's at this point that we're loading from general ledgers, or we've got users putting our forecasts in, and we'll just speed things up again and load the extra data. And you can see now that the balance sheets are balanced because I've got some intercompany data. So here, Echo is claiming that Golf owes them $777, and we haven't eliminated that yet. And if we just go and see down to the leaf element, there's nothing there for Echo, so we'll have a look at US dollars. And there's 583 US dollars, which when we translate that is the 777. And then we can see that screen here, I think, Golf is saying that in fact it thinks it owes Echo 888. So it's very nice of Golf. Once again, that hasn't eliminated yet, so we've got the 888. So that 88 is going to be offset against the 877, and we're expecting to see 111 being written to external creditors. So that 2,000 is going to change once we do the intercompany elimination. If we also see what other changes the metadata has done, well, if we look at the attributes of the subsidiary dimension, it's created some new attributes and created elimination entities. So the attributes given it the currency AUD, identifying as an elimination entity, and every entity we're identifying its parent in the different organization structures. And then for each parent, what its elimination entity is. And if we look at the account dimension, we can see that the sub-accounts are in there, the fact that they are intercompany, the counterparty name, so taking the leaf M there, and the offset account, and also the signage, so the -11. That's copied from the configuration we did earlier. And we have this new cube that's appeared. So the metadata has created these dimensions, and if we have a look into that cube, we can see it's created the map, and I will just go in and create a rule on that cube. And I want to say that for all cells, enlarge that, if ICE dot IC entity for, and the entity dimension, which is ICX subsidiary, at equals ICE dot IC counter party for ICX dot subsidiary, then blank, else continue, and save that. And it's just filling in that diagonal there with blanks. And now we can see that Golf and Echo will meet at elim parent 2 in organisation 1, and in organisation 2 Golf and Echo meet at elim organisation 2. So that was elim organisation 2 in organisation 2, and in organisation 1 was elim parent 2. So different points at which they'll eliminate in the two structures. The final bit of configuration is to edit one of the TI processes, and that is to make it fit my financial cubes. So I've got the 4 there. If we look at the chore eliminate intercompany items, that is running the same TI process 4 times. It's running it once for each of my 4 cubes, the 2 balance sheets, the 2 profit and loss cubes. That process is running this process once for each organization hierarchy in my entity dimension. So organization 1, organization 2. It's running this process, and this is the one that I need to edit. And there are 2 areas to edit, 2 sections: identifying critical variables, and then the loading intercompany eliminations. So here I'm saying, depending on which cube I'm looking at, that the first variable is v version, v time is the second variable, intercompany entity is the third variable, the account is the fourth, currency out, data source out, etc., and the measures dimension and the value. But then that sequence differs depending on which cube I'm looking at. So I need to create a paragraph like that mapping to my cube. And then the load intercompany eliminations, again I need to do a section for each cube just so that I'm putting the data into the right dimensions. So I need to edit that. And because I don't know how many dimensions I'll be dealing with, I have a cube there, fin profit and loss. It's a dummy cube, but it's got 20 dimensions, which will allow me to edit my TI process without it saying it can't find the data source. That's the only reason that cube's there. So that completes the creation of metadata, and we are ready to commence our intercompany eliminations. So we have configured the model, we've created the metadata. Configuring happens once, creating metadata whenever the entity structure changes. And now we do the intercompany eliminations. And that's this chore here, which is running this process once for each of my cubes. And when it runs once for each organization hierarchy in my entity dimension, in this case twice, organization 1, organization 2. And it will go through the data cubes, looking at the intercompany data, looking up the elimination entity map to work out where to do the reversing entries and which currency to do them in. And it takes less time to do than to talk about. So if I run process, and it's done. That was doing it for 1 month in actual data, but you can see it was a matter of seconds, so you might schedule that to run every 15 minutes or just as an overnight after you've loaded the actuals. The scheduling will be up to you, but it is a very quick process to run. So intercompanies have been eliminated. In the next section we'll examine what actually happened. So if we examine the balance sheet cube, and we'll look at organization 1, and I can see that leaf A or alpha Right Limited said that it had 1,800 as a intercompany creditor, that Beta, they owed Beta $1,800, and Beta said that they owed, or Alpha owed them $2,000. So it's a mismatch of one, and they were going to meet in the structure at parent 1, so at elim parent 1 we can see the 2,000 being reversed, the 1,800 being reversed, and the mismatch going to external creditors, so that the balance sheet of elim parent 1 balances. Now we've got Echo and Golf. I'll be over this way a little bit, and we've got Echo claiming that Golf owed them 777, and Golf claiming that they owe Echo 888. There's a difference of 111 there, and they're meeting at parent 2 in the structure, so we can see the 777 being eliminated, the 888 being eliminated, and the difference going to external creditors. And then Leaf A and Leaf M meet at organisation 1, and Mike, or Leaf M, said that Alpha owed them 1,000. Alpha felt it was more like 999, and we can see that that's being eliminated, the thousands being eliminated, and the difference is going to external creditors. In organisation 2, or before we move, we can see also that intercompany debtors have been fully eliminated, intercompany creditors have been fully eliminated, and the original 2,000 of external creditors has been adjusted by those elimination entries, so it's now 1,912, and that was the 200 less the 111 and the 1, giving a difference of 88, which has gone taken off the 2,000 to give us the 1912, and our balance sheet, consolidated balance sheet, balances. If we look at organisation 2, we can see that Echo 777, now that was meeting Golf at only at the very top, so there's the 777 being eliminated, the 888 of Golf is being eliminated. Also at organisation 2, we've got Alpha and Mike, the 2,000 being eliminated. Sorry, Mike, where are we? Mike's saying 1,000 being eliminated there, and Alpha's 999, being eliminated. And we've got the 777 and the 888. And who have I missed? Anyway, there's that 88 coming through off the 2,000, giving us 1912 again. Intercompany debtors fully eliminated, intercompany creditors fully eliminated, and consolidated accounts balancing. And just for the record, we'll go and look at the profit and loss, and we may as well look at the other style that had the distinct year and month dimensions. And if we look at organisation 1, we've got a bit of interest here, but Alpha and Delta, so 150 Alpha claiming income from Delta, and Delta matching that 150, and they're meeting at parent 4, so there's the elimination happening. And similarly, with this one being eliminated there, you've got Beta 110 getting eliminated there, And all of these intercompany entries mean that on consolidation, 0, eliminated. Through various adjustments, we're ending up with a negative 45 against external interest expense. And intercompany sales are all getting eliminated, and the adjustments coming through to cost of sales, which is being negative, and you may then want to write a rule to say that if it's a negative item, you move it somewhere else in your accounts. But the intercompany eliminations are working. So there you have it. The intercompany elimination appears to have worked. I knew it would. The key to it was the intercompany elimination map cube, which was built for that subsidiary dimension. The way I approached that was to all those TI processes, they were creating subsets of the organization hierarchies, sorting the parents into levels, and then a loop went through for each leaf element and went through those subsets in a nested looping that was saying for each entity, for leaf A, where will it meet, well, ignore leaf A, where will it meet leaf B? And it would loop through the subset of level 1 parents, and if it found a match, it would then jump out of the loop entirely, and it would know the parent to make the elim parent and populate the map with that value. If it didn't, it would then go through the level 2 parents looking for the match. If it didn't find one, level 3 and so on, then it would go to leaf B and look for leaf A in the level 1 parents, then the level 2 parents, level 3, and as soon as it found a match, capture that value into the elim mapping cube and jump out of the loop and work its way through the structures. And then the processes that do the intercompany eliminations, they go through all the data and say what entity am I in, what's the intercompany counterparty, and look up the elimination map and know where to post the reversing journals. So that's it. I hope it wins me a t-shirt, and it is quite late, it's a bit darker here. Good night from Australia.